Hi guys, it's Ian Coleman. It is Thursday, the 6th of March 2025. It's just coming up to 4 o'clock in the afternoon in the UK. In this video, I want to explain my system setup. Now we're looking at correlation, we're looking at different time frames, we're looking at cipher patterns, and we're looking at price action. Okay, and the combination of all of these factors then sets the trade. One thing I will say, this trade has been helped on its way by the Canadian Prime Minister, who's recently said that he's in discussions over potentially delaying the second wave of planned tariffs, and that has given the Canadian dollar a boost, and it's also weakened the yen because we've seen stock indices move to the upside. Let's get to the charts. So the first chart that I'm looking at is the Canadian dollar against the Japanese yen. This is a 1 hour chart. Now I said I look at cipher pattern formations. These are built using Fibonacci levels and confluence areas. And often when we see these patterns form inside supply or demand zones, they give a good indication of a change of trend. So here we've got these two triangle formations. This has actually formed what's known as a bullish Gartley pattern. We then get this bullish outside candle within the demand zone, and that is basically my trigger to get long. Why do I like that candle formation? Well, that candle formation basically tells me that the bias has been to the downside, but the traders have basically bought that dip and they've actually completely engulfed, and in this case the last two candles. So it's not just an engulfing candle, it's what's known as a bullish outside candle. These candles are often seen at the base of a trend and the start of a new upward bias. So that gives me my trigger. I've got this bullish cipher pattern formation, I've got this bullish candle formation. So on the close of that candle, which was around about 102.88, it's telling me that there's scope for a change in sentiment. So I've got my entry, I've got my stop loss, which is below the trigger candle, because obviously if that candle gets taken out, then the trigger is void. If we then go to this time frame, which is the 4 hour time frame, okay, here I have another cipher pattern. This is known as a back formation, and that's going to complete around about 107.60. So now I've not only got a bullish formation, I've got a trigger candle, I've got an entry, I've got a stop, I've got a target, and that is the system setup. So using correlation, using multiple time frames, using cipher pattern analysis to analyze where the currency pair is potentially going to go. Okay guys, I hope that all makes sense. I'll be back again soon with more technical analysis. Many thanks.